Wednesday, March 27th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to revisit the technical picture for the major indices, stock market indices, S&P, Dow, Nasdaq, and a look at the big head and shoulder that has been forming for over a year since the end of 2017, beginning of 2018. I spoke about that in a previous video a few weeks ago. I call it the mother of all head and shoulders, and it's still evolving. In the short term, these things can go anywhere, but looking at the charts, it still looks like we're headed for a big correction in the stock market. Always very difficult to ascertain the when it's going to happen. One thing John Maynard Keynes said that I agree with is that markets can remain irrational for longer that you can remain solvent. Yes, there is manipulation in the markets, but if the monetary authorities, were so powerful, we wouldn't have bull markets and bear markets. They can try to influence things, and they do. I'm not, negating that. But when things turn, when the credit market turns, there's very little they can do about it in terms of trying to change things around. I think the market's still bigger. When the market acts in unison, the millions of investors change their mind, is very difficult for the authorities to change it. Before, of course, I'll quickly look at what the markets are doing. I saw the Dow had a pretty good day yesterday, so did the other indices, but the move wasn't great. It was kind of like a day in precious metals when you have a really good day at the start and then it just trades lower, a lot lower from the highs, and the same thing happened for the Dow and the other indices. I think the Dow finished about 150 off the highs, so not great technically there, I would say. So let's have a look here. It's 10 to 8 a.m. London. We've got gold right near the lows here. We've just come off in the last few minutes. We're at 13.13, down 2.5. The high's been 13.1875 and the low 13.1280. We got silver down 7 at 15.35. The range has been 15.34 to 15.50. I still think we're in a good technical position, especially in the weekly chart. Monthly chart is a little bit, hasn't done well compared to February, but we still have, we have a few days left. I mean, 3 trading days now in the month to see what happens. The Dow is up 33 this morning at 25,687. S&P is up 6 at 28.24, or 0.2%. We've got the Nasdaq 100 future at 73.69, up 18 or 0.25%. We've got sterling down 0.2 at 130.180, 0.2%. The euro is down 18 pips at 112.50. I noticed the euro didn't have a great day yesterday, even compared to sterling. So that's kind of hurt gold, I think, a little bit there. We've got dollar unchanged against the yen, Japanese yen, at 110.62. And the dollar is firmed up against the yuan, Chinese yuan. We're at 6.73. That's up 0.12%. Crude oil came off a little bit yesterday, below 60. Right now, WTI is at 59.92. That's unchanged. Brent unchanged as well. Well, Brent is up 0.25% at 67.60. What about the bond market? I think the bond market needs to be looked at closely because it's pointing, of course, to a recession. The 3-month now is higher than the 10-year. Right now, the 10-year is down almost 2 basis points. We're just around 240. The 3-month is at 246. So 6 basis points inversion. That's been historically in the last 50 years, always pointing to a recession. One thing I'd like to note as well, we've seen the New Zealand dollar, or the Kiwi, come off quite a bit. The Reserve Bank of New Zealand flags possible rate cut, according to investing.com. So this morning we've got XAU NZD, or NZD, gold and New Zealand dollars, almost at, well, approaching $2,000. It's up quite a bit here this morning. It's up from like just above 1900 to 1932. So, as I said, precious metals will protect you. All national currency, it doesn't matter where you are. Precious metals will protect you versus the debasement of the currency by the monetary authorities. So you can see here the key resistance in the Kiwi, gold Kiwi, is around 1960. We're getting pretty close to that. So let's look at the charts. First of all, let's look at gold and silver. I knew I was going to talk about the stock market, but quickly look at gold, because we are all interested in gold, or at least most of my viewers and me. You can see here we had that big drop in February, towards middle to the end of February. That's the weekly chart here. And now we've been going up for the last, we're in the 4th week. Right now we're down on the week here just because we've come off, but it's still looking pretty good, in my opinion, gold. As you can see, of course, we need to regain that, well, the high in February was around 1347. So if we go through there, we could be very quickly up to that 1365, 1375, which will be the next resistances. Silver, this is a good chart here. We broke out of this falling wedge or pennant back in January, actually. And in February, looked like we're taking off. And of course, we had the big correction down. We went below that, but we're actually back above it. So silver is looking okay. It's not moving as well as gold at the moment, but it's looking okay. So what about the those head and shoulders I spoke about? Well, here's the weekly chart of the S&P, and we've had last week a spike higher. We didn't go straight down since I did the video about the head and shoulder, but it's still there, the head and shoulder. It might just take a little longer for the right hand shoulder to evolve and then for the market to come off. I still think sometime from now on until June, maybe a little later, will be when we get the next part of the shoulder down towards the neckline. But as you can see, this formation has been evolving since, you could argue, the end of 2017. So it's a long-term thing. It's a very long-term top, in my opinion, that's forming. Sometimes we say that markets are forming a great long-term bottom, and that's true. And we can flip it around and say, well, the stock market is forming a great long-term top here. Not, I guess for bulls that's not great, but objectively, technically. So that's the S&P. Let's have a look at the Nasdaq 100 on the weekly chart. Yeah, and you can see that, I had that head and shoulder there, and I thought we were going to start down already, but we've actually gone up quite a bit. But you could argue as well that, the neck, the right hand shoulder just continued a little bit, and it's still forming. I guess as long as we don't break the all-time high, that's still a right hand shoulder for me. So it's just been it's just a matter of time there for the Nasdaq, in my opinion, Nasdaq 100. So here's the Dow, still looks like a head and shoulder. So I personally think that yeah, this is gonna come about. I think the top was last year. You know, I remember telling my viewers back in 2018 that I thought that was the top, and I guess I was partly wrong, because in October we made a higher high, but not very much higher in the Dow there. We spiked higher, but if anything, it looks like a double top. Some of you follow Charles Nenner, and I have followed some of his videos, his interviews with Greg Hunter, and he said he got his clients and himself out of the stock market in late 2017. He did call for bonds to go higher, but the timing isn't perfect for him either, because bonds still kept going down after he made that call, but now it's completely turned around, and bonds are going up. So very hard to navigate the market. As most of you know, and some of you might not know, I worked as a futures and options broker in the financial sector here in the UK, in the city of London. And yeah, it's hard. It's hard. I think if you're going to be a trader, you need to do it as a business, 24/7 almost. I mean, that's what Jesse Livermore said. It's got to be your own business. You can't be you can't do a job in a completely different sector and try to navigate these markets. I think it's very hard to do that. So there you go. I still think, the bond market is pointing to a recession. Yeah, I know the authorities, the PPT, they'll try to delay things, but in the end of the day, I think the market is bigger than the PPT, and yeah, we're gonna see more pain, in my opinion, for paper markets. We need that to unwind. It's just not sustainable, unless, of course, they want to create a hyperinflation. I mean, you'd think if they did, I mean, the Fed would probably, they'd stop the QT, not in September, they'd stop it now and start doing QE. So yeah, I think they're making a mistake. If they want the markets to go higher and things to get better, they should flip everything around right now, and they're not doing that. So that's my view there. If you enjoyed this video, make sure you hit the like button. If you enjoy my videos but haven't subscribed yet, think about subscribing, and make sure you also hit that little notification bell above to be notified of my new videos. And share it far and wide if you think other people would enjoy the kind of content I provide. You can also follow me on Twitter, Steemit, and DTube. I wish you all a great day. Take care. Bye.